What's going on in the San Diego real estate market here in January of 2024? My name is Kyle Whissel with Whissel Realty Group, and I'm going to break down some numbers to you of exactly where we're at today. But before I do that, I want to talk a little bit about where we've been over the last year. I'm going to hit on three kind of key data points that I'm looking at when it comes to assessing where the market's been, because I think that's going to help give us a little more insight into the direction of where we're headed. So three key data points I want to look at from 2023. Number one is I want to take a look at where is the inventory today versus this exact same time a year ago. And that inventory is down about 30% right now. So the number of homes for sale out there right now is down about 30% from a year ago. It's a pretty substantial decrease. And if we look back to where the market went from this same time a year ago, with inventory 30% higher than it is today, the market shot up from this point forward. So we're coming in with significantly less inventory than the same time a year ago, which is really kind of a precursor to where I think we're going to go. And we'll talk more about that with our 2024 numbers. Second thing I want to hit on is what happened with prices over the last 12 months. Well, the median home price from the end of December last year to the end of December, end of December 22 to end of December 23, we saw median prices increase 10.7% in San Diego. So significantly higher than the nationwide average. Nationwide was about half of that, or maybe even a little less than half of that. I've been hearing numbers in the 4 to 5% range. So 10.7% in San Diego County year over year change in median home value. Now, it was not a smooth year by any means. Coming out of the gates last year, inventory was super low. We shot up in values probably close 15 to 20% in some markets in the first 6 or 7 months of the year. And then we gave back some of those gains in the last, 5-6 months of the year. So we saw a little bit of a roller coaster up early, kind of leveled off in the summer and came down a little bit toward the end of the year. But at the end of the day, end of December 22 to end of December 23, 10.7% up. Now, the main thing that's driving a lot of this volatility in the market is mortgage interest rates. So at this same time a year ago, we were sitting about 6.14%. Today, we're sitting about 6.74%. Now, we've gone on a roller coaster with rates throughout the year as well. We started out in the low sixes, and then all of a sudden in the summer, the rates shot up to 7 and then shot up to 8. And that's when we saw the market kind of plateau and then start to tail off a little bit. So that the last quarter of the year, we actually gave back a lot of those values, and mainly because rates were so high. Now, as we've wrapped up 22 here, or wrapped up 23, headed into 24, we've actually seen those rates start to decline again, where we came off our high of 8%, came down below 7%. Now we're actually in the sixes again. And as we head into 24, the Fed, or the Federal Reserve, is projecting they're going to lower their rates somewhere in the neighborhood of 3 to 4 times over the next 12 months. And mortgage rates and those federal funds rates tend to move very similarly. So if the Fed's already coming out with their own projections stating they're probably going to lower rates 3 to 4 times this year, it's very likely you're going to see mortgage rates decrease throughout the year. And what we have seen since COVID is rates volatility. The market moves a lot based on what's happening with rates. So when rates go down, buyers come back in the game. When rates go up, buyers get out of the game. So because of the fact we expect rates to go down in 2024, we expect the market to go up because we think a lot of those buyers are going to come to the table. And now some people will say, well, so are the sellers. All these sellers who've been holding off on selling, they're going to come to the table too. But let's be real, the sellers who haven't sold their home over the last year or so because of the difference in rates, they haven't sold their home because of how high the rates are when they go to buy a new home. Well, if they're going to sell their home now, it's because the rates are lower so that they can go buy another home. So for every seller that comes on the market, most of them are going to also buy a home. So it's going to be a 1-for-1 exchange, which is not going to move that inventory number. But the buyers are coming back in the market because the rates are lower, which is going to pull that number down. And again, inventory a year ago was higher than it is today, and rates shot up a year ago. So I believe as we head into 2024, we're starting to see some of the early indicators. One of the things I look at is what's called our market action index. It's a relation between the rate of sale versus the inventory of homes for sale. And that we've kind of hit a bottom and we're starting to come back up, very similar to what we did toward the end of 2022 which caused prices to shoot up in the first and second quarter. I think we're starting to see some of those early indicators of that market action index trending in an upward direction. So if you're asking me, what do I think is going to happen in Q1? I think you're going to see us go past a bottom here. I think right now, if you're waiting, if you're watching this and you're one of those like, I want to buy at the bottom, I want to buy at the bottom, you'll never know when you're at the bottom until you're past it. But I think we're as close to a bottom as we're probably going to get, at least this year. So if you've been waiting for the right time to buy, I think that time is now. Rates have come down. Inventory's low, but buyers aren't all coming back. We're still kind of in that winter, which tends to be slow. So I think you've got this a little bit of time right now where we're at this trough. But I think if you wait until, the springtime or the summertime, I think it's going to get kind of crazy again. That's my personal prediction. I've done this for 20 years. We've sold over 4,000 homes, have a degree in economics, know a thing or two about this. I think if you wait, you're going to kick yourself. If we're talking 6 months from now, we're sitting here in June, we're gonna look back like, dang it, I wish I would have bought more in January. So if you're watching this, if you're thinking of buying, now's the time, get in there. And if the rates continue to get lower, you can always refinance into a lower rate. But if you wait for the rates to get any lower, it's just gonna feed the frenzy of more and more buyers getting in the game. So take the rate now. You're in the 6s now. You're not in the 7s or the 8s anymore. You're in the 6s. Take the 6% rate now and enjoy watching the value shoot up. And as the rates continue to come down more, you can always refinance and get that rate lower. And if you're thinking about selling, it depends when it comes to selling. It really depends what you're gonna do. If you're gonna sell and you're gonna buy the bigger home, you're gonna sell, you're gonna move out of the area. So if you're thinking about selling, just give us a call, shoot us a text, the number's down below. We can sit down and meet with you and figure out exactly where you're at in your life and where you're gonna be going. And we can help you determine if now's the right time for you to sell, or if it makes more sense to hold on, or maybe it even makes sense to hold on and turn that property into a rental and you can go buy that dream home. Either way, call us, text us on the number down below. We'll sit down, give you that free consultation. I'm Kyle Whissel with Whissel Realty.